Welcome to our Distinguished Speaker Series. This morning, afternoon for many of you, you will hear three people speaking today, or three people's voices. You'll hear mine and then the voices of our guests, Dean Madhav Rajan and Mr. JP Gan. All participants will be muted throughout the call. However, you are welcome to add any questions at in the Q&A box at the bottom of the screen. Our presentation this morning and this afternoon, sorry, I can't switch off with Chicago time, will last for about 60 minutes today. And then we'll have about 20-25 minutes for questions and answers from you. The webinar is being recorded and we'll make that available on our YouTube channel in the next few days. So on behalf of the Chicago booth, we thank you for joining us and we appreciate your time and interest. With that, Dean Rajan, do you want to take it from here?
Sure. Thank you, Jessica. Hi, everybody. As Jessica said, I'm Madhav Rajan. I'm the Dean and the George Pratt Schultz Professor of Accounting at Chicago booth. Hope all of you are doing well. It's great to see so many of you on this webinar today. And it truly is my pleasure to have you here as we welcome booth alum JP Gan, founding partner of INCE Capital, INCE, to our virtual Distinguished Speaker Series. This is a long-standing Chicago tradition, the Distinguished Speaker Series. The goal is to bring high-profile leaders from government, from business, from the community to the school to share their insights and experience. We began holding these virtual Distinguished Speaker Series events earlier this spring, and it was quite successful. We had very insightful chats with esteemed alumni such as Kurt Del Bene from Microsoft, Tom Ricketts of the Cubs, Jenny Scanlon from UL, and Byron Trott from BDT. And we learned a lot from these executives about how they and their companies have responded to COVID-19. We then kicked off our virtual Distinguished Speaker Series for this year, this fiscal year, a few weeks ago, with a great chat with Ann Mukherjee, Chairman and CEO of Pernod Ricard North America. And I'm thrilled to introduce today's speaker, JP Gan. As I mentioned, JP is a founding partner of INCE Capital. JP has been named a top venture capitalist worldwide by the Forbes Midas list 5 years in a row, and he was ranked number 5 on the global list in 2019. JP has been named a top venture capitalist in Asia and China by media and institutions including CB Insights, New York Times, Fortune Magazine, Zero Zipo, China Venture, 36KR, and so on and so forth. Now, JP focuses on internet consumer and intelligent technologies, and his successful investments include Trip.com, Bilibili, DianPing.com, which merged with Meituan, and Musical.ly, which was acquired by ByteDance and became TikTok, to name just a few. Before founding INCE Capital, JP had been a managing partner and a member of the investment committee of Chiming Venture Partners for 13 years. He started his venture capital career at the Carlyle Group in 2000 and was a director and founding member of its Asian Venture Fund. JP holds a BBA from the University of Iowa and an MBA from Chicago booth, and is a member of both the Polsky Center Council and the broader Booth Council. And we're thrilled to have JP here today to chat with us about his company's response to COVID-19, among many, many other topics. Thank you for being here today, JP.
Thank you, Dean.
So JP, maybe we could start by talking about COVID and its impact. Where were you when it happened? When did you realize this was going to be an issue, perhaps a big issue for a long time to come?
Right. So I was here in Shanghai right before Chinese New Year in mid-January, when the government announced to, basically shut down the city of Wuhan. There was obviously a lot of panic. I was scheduled to leave China to go to Indonesia and Japan for vacation for Chinese New Year. So that went really smoothly. I actually spent a few weeks in Japan, kind of waiting to see what's happening with the COVID in China. But increasingly, people start talking about this being a global thing, and increasingly, Japanese become, worried and concerned, and more taxi drivers or, car drivers ask me where I'm from. So it was getting a little bit nervous. And then, I decided to maybe come back closer to work. So I went over to Hong Kong, which was all, it's in a kind of semi-shutdown mood. But I have the office there. We still can't get a lot of work done. But as time goes on, it seems like the situation gets better in China, but worse in the rest of the world. I remember very clearly. I came back to Shanghai on March 8th. The flight was completely full. So I was wondering, how come so many people are flying, during this crisis? But once I landed, someone made an announcement, for people who came from the U.S., Europe, Iran, and some other countries to get off the plane first. Actually, half of the people got up, and so most people are transiting through Hong Kong to come back to China. I actually went through SARS back in 2003, so I actually initially didn't think it was going to be as widespread as it is now. So I think during the crisis we keep on going, making investments, looking at deals. So it turns out to be to be okay, even though it may not be the right call at the time.
So, so you've been in China ever since the trip you went back from Hong Kong. You've been in Shanghai.
Yes. Yes. Well, I wish I could, come to Chicago, go to Hong Kong, and any places, but it doesn't seem to be able to.
And so, could you speak? You said that you continued to make investments and other things. Could you just speak about the last 4 months, let's say? What are the kinds of things you've been thinking about investing in, and has COVID played any role in the kinds of investments that you've been making?
Right. So as soon as the COVID hit, my team and I start doing some, research and, having hypotheses. What might be the sectors that are positively impacted by COVID, or, actually benefit, if you will, from this pandemic. One thing came to mind was education, online education. As people know, the Chinese people spend billions of dollars every year after school tutoring for their children. From K to 12, everybody goes to some kind of AST, after school tutoring institutions. And in general, Asian families spend a lot of money on that type of things. And we know there are a lot of mid-sized AST institutions have maybe hundreds or thousands of students, offline, basically open 2 days a week, Saturday and Sunday, and some evenings. And all those people need to bring that business online. Otherwise, basically they will die. And I'm sure parents still want their kids, keep on learning, even though they cannot go to school. So we look at a lot of those education tools that help people to learn online, in addition to Zoom. And we actually found a number of companies that provide kind of video conferencing type of software, but tailor-made for education. And we immediately zoom into a company called ClassIn, or EO, which has a product basically combine Zoom type of video conferencing with a online Blackboard, as well as multimedia content delivery software. And the company's business was running through the roof. For the month of February and March, basically they grow their revenue to 4 times of their entire 2019 in 2 months. They couldn't even take on business because they didn't have enough manpower. So we look at a number of other players, and then we decide, this is the company that we want to invest in, and then we immediately, sign a term sheet, lock in the deal, and of course, one of the issue that we were thinking about is what happens after the pandemic. Would that business go down? Of course. But we talked to a lot of the parents, students, as well as this after-school tutoring, owners, company owners. And the general sense was that despite the pandemic, they have already been thinking about moving a lot of the classes online. But this is basically a catalyst for them to switch over. They think that maybe in the future, even after the pandemic, they would only spend, maybe half of their time or quarter of their time in real life physical, classroom. 50 to 75% will migrate to online. So that gives us a lot of confidence that even after that pandemic, most of the just after school tutoring activities will move out, which lead us to think about many things that may change. It may go back, but there are things, consumer behavior is going to change, business behavior is going to change. We have been increasingly seeing companies that decide that, maybe working from home is not such a bad thing. Maybe working remotely is not really a bad thing. Online, at least, some portion of the education could be done online. I think, business travel is going to be hurting. I'm sure you read about it. So overall, I think even after the pandemic, there will be a lot of changes in consumer behavior. And another thing is online grocery delivery. People always thought the grocery is one of the most difficult categories to do e-commerce. But again, with the pandemic, even people who are not as familiar with mobile phone, with technology, are forced to use their phone to order grocery online. My parents, 70 plus years old, they learned how to do this because otherwise they couldn't get their food. So I think it will be very interesting to see how consumer and business behavior change after the pandemic.
Mm-hmm. So it seems like in many ways you've used the pandemic as just in thinking through sort of opportunities, right? Has that mindset always been in you, that you're always looking at situations and not saying, oh, this is horrible, this is terrible, but sort of what you can get out of it? Is that something you've had to work on over time?
Well, I think almost by definition, as a venture capitalist, I have to be more optimistic than probably an average Booth graduate or an average person who work in the finance industry. But I think, so in general, yes, we have to be optimistic to kind of invest in companies with nothing but a few computers, right? Paying hundreds of millions of dollars in valuation and hope that become bigger. But I think we also are very focused on, research, on look at data. We'll come up with a hypothesis, but we still want to talk to the industry participants, the consumers, the users, to get their feedback, to make sure, data actually support what we think might be right around. And, as an investor, we always make mistakes, almost by definition. As you know, a lot of our VC deals don't go well, right? Actually, the majority of them don't go well. Only a few that became, unicorns or, multi-billion-dollar companies. So we have to accept our mistakes. But, we're optimistic, but also we do research, we do data analytics to support our decision. And hopefully we get, more right than wrong in general.
Mm-hmm. So as I mentioned, you've been incredibly successful in investing in the Chinese sort of internet consumer industry. Did you always know that that was the sector you wanted to focus on? And could you just go back through some of the big investments you made and what sort of attracted you to them at that time? Back, like when you said, back when they had no revenue, you were investing just on potential. What drove you to think that these could be very successful?
Maybe I start with where I first started my VC career, right? I joined the Carlyle Group as one of its founding members of the Asian venture business. I interviewed with them in March 2000. As you may know, that was the peak of the last internet bubble. I joined in May. I remember it was about 5,000 points in March 2000, which was all-time high. I joined in May. I already went through some corrections. As I move on, Nasdaq just keep on going down, and then boom, it hit September 11, right? 2001 hits, and then SARS in 2002, and I think the interview really went smoothly. Everything else just went downhill after I started my career. But with that said, we continue to make investments. And I was very fortunate to be invested in a company called, right now it's called TRIP. It used to be called C-TRIP. C stands for China. Now the company wants to be more international, so change the name to trip.com. It's the 100% shareholder of Skyscanner, which is a travel meta search engine. And we were investor in C-Trip, which basically took advantage of the increasing middle class people in China who are traveling more and more frequently for both business and for leisure. And even though it was an internet company, the initial transactions are mostly done over phone, over call centers. But we saw the trend of more and more people are willing to pay. Well, first of all, a lot of people probably just started to travel for the first time back in 2000, 2001. Flying for the first time, staying at the hotel for the first time, but their purchasing the traveling population gets bigger and bigger, and the purchasing power gets bigger and bigger. And then it became, pretty much obvious that a lot of the early business people from US or Europe went to China with the assumption that if we can get 1.3 billion people spend $1 a year, I got $1.3 billion revenue, right? But increasingly, we're seeing, companies are actually getting, that kind of revenue in China from its consumers. And more and more companies are getting people to spend, more than $1 a day. Sometimes, $1 every quarter, every month, every day. And the consumption have grown tremendously. And also, we're finding that we have a new breed of entrepreneurs who are trained in the US or Europe or other parts of the world, who have the managerial and technical skills. They were able to deploy the state-of-art technology, software technology, database technology, as well as the managerial skills to scale up the business. Who are much better and a higher quality than the previous generations. So, C-Trip actually went public on the Nasdaq in December 2003, right after SARS. And at that point, it became pretty obvious that, if I can invest in consumer companies using internet technology to scale up faster and more efficiently, we can have very good investments. So, ever since I've been following, this kind of simple thesis all these years along the way. Sometimes simple is beautiful. Once you have, one simple thesis, you just keep on going after again and again, making mistakes along the way. But eventually, you're going to, work with some great entrepreneurs, scale up the business, and generate secure returns.
You, after you made the investments, JP, how much do you sort of follow up with them? How much of an ongoing connection do you keep with the company, or do you just make the investment and sort of, so what's your philosophy on that?
Right. So I've been a member of C-Trip's board since 2001. Even after the company went public, I continue to serve on the board. I've been chairman of the audit committee for the last 19 years. But in general, I think we want to be a value-added investor. We want to sit on the board, provide strategic guidance and advice. But we try our best not to get involved with the operations, and we let the management to do the operations. And in general, we will, on the strategic issues, very often we will debate with the management. We want to, kind of watch out for their blind spots and talk about the potential risk and everything. But in general, we respect the founders' decision in the overall strategy and the execution.
Mm-hmm. Could you speak a little bit about your decision you had a phenomenal career at Chiming and then you left to start your own firm. What was sort of the thinking behind that, and has that been a very different role than what you thought it would be?
Right, I'm at a certain point of my career that I feel that I am even more optimistic, that I want to take more risk, and be able to start a firm with my partners to do the things that we think that we have done well in the past, but also kind of tweak a few other things to optimize this business. Actually, it was pretty interesting. I was in the management conference in May, if you remember, and I was actually still kind of debating if we want to start this new firm or not. And then I was listening to Professor Kepler interviewing Howard Marks. He said he started Oaktree at the age of 52. I was like, wow, okay. And I was 5 years younger than that, so maybe I could do that again. It was one of the kind of awakening moments. Like, what else do I need to think about it? Okay, let's just do it. And I officially left June 30th and started into July 1st last year.
And has it been very different than what you thought it would be? Have there been big surprises for you in this new company?
No, I think again, I've been in the business for almost 20 years. I have been involved with the investment, management, fundraising side. Pretty much all parts of the business. And we've been very lucky to have some, investors that have been with us for some time and are willing to back us, even though we are brand new. So I think, we started July 1st and we did our first closing in August last year, and the second and final closing October 8th last year. And we were able to raise, $352 million in relatively short period of time. So overall, I think I'm very pleased with the outcome so far.
Okay. So you and I have spoken about this off and on, which is, is there such a thing as the right background or track for a venture capitalist? And how do you compare this as a career versus, say, being in private equity?
Right. Well, I get this question a lot, from Booth alumni, from other graduates. I would say that venture capital is probably one of the most diversified, people in VC have probably most diversified background. And people came from, all kinds of background and training. You got the former entrepreneurs, you got a lot of the corporate executives, you got people like me who came from, kind of finance, banking background. and you got former professors, and you got a lot of, even some of the NBA players have VC fund, as you probably know. I think I think the reason for that is, VC is such a long-term business, and it's very, very difficult to kind of project the outcome. The returns are very, very volatile. Pretty much, I think the top 20% firms generate 80% of the return, and it's actually in a way it's erratic and difficult to project or judge who makes a good VC. And it takes a long time, sometimes 5 years or even longer to find out whether he's good or not. So that's why people who have some money can always start a VC fund. The joke is that almost every retired Alibaba, Tencent, or Facebook executives want to start his or her own fund to be a VC. And the entry barrier is really low, right? If you got a few $1 million, $5–10 million, you can start your fund. And then if you can get your friends to participate, then you're in business.
So you mentioned that it might take a long time to find out who's a really good investor. So in your mind, what are the characteristics of a good investor? What do you, like, if you were to think about what are the things that have served you so well in your career, what attributes would you say those are?
Well, I think in general for any career, intelligence, hard work, the work ethics, obviously always very important. I think in VC specifically, you have to be optimistic, and you have to be able to envision or believe what other people kind of the picture they draw. You have to believe in well, not all of them. You have to be kind of cautiously optimistic or believing what other people describe to you. And very often you have to be empathetic. You really have to be able to listen to what the entrepreneurs present to you. But at the same time, you have to be analytic, take everything with a grain of salt, make sure you check the numbers, check the market size, even though very often you are just making a bet based on your experience, your intuition, and your judgment of the market trend. Mm-hmm. And we are in a business with very, very imperfect information or a lack of information, and you really have to make a judgment of what is real and what's projected and what's dreamed, and then make a balanced bet. I think that's probably what I would say. I think the empathy thing is actually very important to think from his perspective, how he envisioned or her vision of the future of her business.
And just looking at the business, you've chosen a sector that's done incredibly well. Do you feel like that sector has continued growth potential? What do you think that is? Just if you look at the China internet consumer sector as such.
Right. Well, I think again, there 1.3 billion people. The GDP per capita has grown to $10,000, and the wealth that's been created in China in the last 20 years is real. There are a lot of people are moving into so-called middle class, bracket, and the consumption power is also real. And I think increasingly we're seeing Generation Z getting into college, graduating from college, and start working. And the Generation Z in China is actually, it has a lot of similarity to people similar age in the rest of the world. But especially for China, this generation is the first generation that didn't go through a major war or cultural revolution or the initial economic hardship in the 70s and the 80s. And they grow up pretty with the abundant, materials and consumption products. So in a way, they are very unique, and their family, is a lot wealthy than the previous generation. They are much better educated. They're being exposed to the world. And exposed to many new things and technology. They literally grow up with internet and mobile phones. I'm sure many younger folks can use mobile phone much better than all of us, even though I'm very close to the market. So I think all those characters give them consumption power. They're willing to spend. They care less about brand. They care more about stuff that can allow them to express their personality, and they care a lot more about price to performance, and they care about experience rather than the materialistic product. Again, we think they are much more savvy and well-educated consumer. And I'm looking forward to investing in some companies that can serve this generation consumers better with the higher quality of products and services.
Okay. Thank you. So I'm going to turn it over to Jessica to ask some of the questions the audience are coming up with JP, and then I'll come back to you towards the end. Okay, Jessica?
Sure. JP, can you comment on the upcoming sale of TikTok and your thoughts on the latest situation, given you were an investor in a company that was acquired by TikTok?
I'm sorry if there's one thing that I don't want to talk about, I don't want to get into, that's the thing. Read Wall Street Journal, read New York Times, and anything I know, I can't tell, sorry.
Fair.
But it is a very sensitive issue, as you know.
Very fair. Somebody did ask, they said, this might be a silly question, but can you define consumer internet startups? I think they had a question about the definition.
Well, our definition is, using internet or mobile internet or other technology to serve consumers or to provide product or services to consumers.
Got it. Another question: what will you I think they're saying, what will you invest in and what will you avoid in the near, medium, and long term? So I think they're looking for industries or products, maybe.
We focus on as I said, consumer and the internet companies that use technology to deliver product and services to consumers. At the same time, we're looking at intelligent technology that can help the businesses to be more efficient, scale up more easily, and some of the industries that are or some of the sectors that are popular, artificial intelligence, big data, and automated machines for logistics, for construction, manufacturing, and in general, artificial intelligence and automation will probably have a lot of room to grow in the next few years.
When you talk about forecasts, do you have any forecasts on the tourism, food and beverage industries? And they seem to be affected the worst, due to the pandemic, but how can startups in these industries possibly recover post-pandemic?
I'm very glad to report within China, the domestic travel is back to about 75 to 80% of what it was last year, same time last year. The leisure travel actually has recovered, more than almost 100%, especially for the summertime. All the hotels or resorts around major metropolitan areas are sold out. It's the room rate has gone up quite a bit, much higher than last year. Business travel has recovered somewhat, maybe 60 to 70% from what it was last year. But overall, the domestic travel has recovered quite a bit within China. For the long-term projections, I'm sure you can find a much better research report than what I have.
There's a question from Angie. She says, "Hi, JP, nice to meet you. I visited your Shanghai office last week." But her question is, what keeps you entrepreneurially and what keeps you motivated after closing a lot of deals and making good returns?
I think I love what I do, and I enjoy what I do. Working with entrepreneurs, making investments, helping them to make the right decision at the crossroads in the growth business, and become a well-known brand among consumers and also business leaders. It is just what I enjoy, and I want to keep on doing this, for a long time.
What changes do you see in the delivery of virtual medical services?
Well, again, I think back to Madhav's earlier question, we were researching, a lot of the sectors that actually were positively impacted by, COVID-19. One of them is telemedicine, because for a while, a lot of the hospitals were shut down. A lot of the healthcare service providers were focused on COVID, were not able to kind of deliver normal services to patients. So a lot of people basically try the telemedicine for the first time, and many of them use telemedicine or kind of a video conferencing type of diagnostic to get their prescription, and then have the prescription to send to online pharmacies, as well as some offline pharmacies, and have their drugs delivered to them. Again, I think that will be something people's behavior may change after the COVID-19, as more and more people got used to doing this for the first time. Really think about it. A lot of the long-term disease, like high blood pressure, diabetes, you don't really need to go see the doctor every time that you want to get a prescription. And very often time you can do a lot of diagnostic over delivery, right? And you can talk to a doctor over kind of telemedicine platform. Again, we think in the future more and more people will become used to telemedicine and prescription delivery, and some of the activities can move online, which actually take pressure off the offline physical hospitals, so they can be focusing more on the more serious disease. We have very high hope for the telemedicine industry.
Do you think it's important to have a geographical approach to how you choose your investments?
Yes, I think for us, we focus on China, and the vast majority of our investments are in China. I think especially for venture capital, because all the new business ideas are kind of are unique for the local market. And most of the new business can only solve one problem at a time. And usually it's a relatively small problem. And many of those problems may be geographically unique. So it is important to be closer to the market, to the consumers, or to the business in the local geographies. So I think for VC, it's actually very important to be close to the market. I think even in the old days, in the 90s, the Silicon Valley VCs will never leave Valley. I think any company that's more than 50 miles away from Melon Park, they won't be looking at or investing in them. But of course, that have changed a little bit in the United States. But overall, I think VC is a local and geographic-based business, which may actually not be true, for private equity or investment banking. That could be much more regional.
What is your favorite question, process, or model that you use to influence or develop leaders in your investments without diving into their operations?
I think this may sound corny. I always ask the question, where you want to be when you grow up. Grow up as when you become a bigger company. I think the passion of the founders, of the entrepreneurs, is very important. Their passion for software, passion for product development, passion for solving problems, actually the real driving forces behind successful ventures. And being an entrepreneur or starting a venture is a marathon. It takes years and years. I really look for the passion in them so they can, stick around for a long time and put in the 50 hours, 60 hours, 70 hours a week into the business, and willing to, solve problems when it comes to them. And I think, so this is a question I always ask, what is your dream and where you want to be when you grow up?
In general, what would drive you to consider an investment originally had a good plan, but might not work out? And how do you persuade the investors to stop and move on? Sometimes, people know that it can be hard to have those tough conversations with entrepreneurs.
Well, I don't. If the company runs out of money, then they have to stop, right? And for a lot of the entrepreneurs, they have the tenacity, persistence to keep on going after again and again. They try their best to raise money, and as long as there's some resource, some capital left, we should give them the room to continue to try different things. Venture return is very, kind of optional, binary. You either make it or you don't make it. Salvaging the last penny is not going to change your overall fund level return. So you might as well give the guy a chance to try it again.
Are there common mistakes you've noticed in entrepreneurs with whom you've not invested?
I think a few common mistakes that entrepreneurs often make. One is lack of focus. Many companies or entrepreneurs, after the raise tens of millions of, hundreds of millions of dollars, they start thinking about many different things. You want to try something here, you want to try something there. And all of them may be smaller projects or relatively small dollar amount. But what really the real negative impact is on the CEO or the founding team's time. You can have a lot of capital in the bank. You can try many different projects, but you only have 24 hours a day. And lack of focus will diverge your attention to other things. And in a competitive situation, when your competitor may have similar amount of capital, but he focused 18 hours of his time on that one little problems, while you are diverging your attention on other things. And unfortunately, very often time, even though you may be smarter, you may have better team, but for someone who is 100% focused on one thing, oftentimes prevails. So lack of focus is one thing. And the second thing is not able to keep the team together. Very often time, you got 2 to 3, good friends, former classmates at school, or former colleagues. You start a business and you have some success, and then you raise a lot of money, but then you have disagreements, which is natural when you have a few intelligent, hardworking, and energetic people together working on things. You're often going to have disagreements, and sometimes people become irritated by each other, and the team kind of break up. All the entrepreneurs were not able to attract new talent and the new skills into the company. So that's often another mistake that entrepreneurs make. And there are a few other things. I have seen pretty much every possible mistake that anyone can make. But if I have to bring up 2 top items, that would be lack of focus and not able to keep the team together or get new talent to the team.
What do you think about the ideas of build to sell and build to last?
Right. I think I, as a VC, in general, will prefer to invest in entrepreneurs who want to build for less, or people who want to build great companies. But in the middle, as I said, entrepreneurship is a marathon. It takes a long time. At any given time, if someone gives you an offer that's too good to refuse, I can accept the fact that we sell the companies, especially with a good strategic fit and with a good return. I, in general, don't believe in start a company just so you can sell it along the way. It's not going to work because your team is going to know it, your partner is going to know it, and you're not going to get money from good VCs like us. So overall, if you want to start a company, you better try to start and build a company to last. As I said earlier, you have to have the dream, you have to have the passion, you have to really love what you do to succeed in the long run. But in the middle of the way, if the company is sold, that's fine. There's not necessarily a direct correlation between what your passion is and the end result.
You mentioned before experience are becoming more important to consumers. What types of experiences are you seeing on the horizon that you find particularly exciting?
Um, I think travel is probably one of the top experience that the young Chinese consumers would list. And then, going to the shows, going to concerts, live shows have surpassed um, all the concerts in the previous. I mean, it has hit record year again and again, right? Going to sporting events, and all of those things are become very important to the younger generation, and they're willing to pay a lot of money for it. And then also there's experience, by there's also virtual experience, using new technology, augmented reality or virtual reality type of devices to, try different things. Those are very interesting experience, and the young consumers really love it.
What is it that makes you that has made you more right than wrong in markets with limited data?
Oh yeah, one thing, boost education, of course. I think Madhav make sure, ask me. I want to make sure I have putting some some advertising. No, I mean really, I'm from bottom of my heart. I think as I were at Chicago, we learned we got exposure to many subjects. Finance, marketing, economics, and many different subjects. And then we also learned the theories of many business principles, and learn from the great professors like Merton Miller, Kaplan, and many others about how they came to their hypothesis and how they do research behind the theory and the principles. Over my last 20 years of experience, I oftentimes see certain type of behavior or business activities or transactions. And then it kind of will kind of resonate with me that, oh, that actually fits one of the things that we talk about, back in school. And you actually see that type of theory play out in real life. But the participants may or may not know that they are actually playing into certain theory or hypothesis. But the reality is, someone like other professors, Eugene Farmer, so on and so forth, have already done research on that type of transactions or that type of behavior. So I think this is really important. And also the data analytics. And we VCs are not known for data analytics or for building models or gather facts or information. I think our private equity counterparts are probably better known for that. So for me, even though the information is limited, we know we have imperfect information, but I insist to look for more data, more information, more facts, including doing market survey, sometimes come up with our own data, using technology to kind of crowd the web, trying to find more data. And you'll be surprised how this incremental little information or little data you get, or you push yourself, you push your team to gather, will help with the long-term, decision as well as the outcome. I think the incremental data input actually produce disproportionately better results. I think all those things really helped me over my career, over the years, in my career over the years.
Can you share some of the learning lessons, either from a missed deal or deals that just didn't work out, from your recent investing experiences?
Well, there are just so many of them. I don't even know where to start. Think about that. We, as a team, probably meet with 1,000 companies every year, or 1,000, different founders every year. And we end up looking at, or spending more time looking at them, probably 100 to 150 of them every year. And we actually sign term sheet with 30 to 40 of them. And we end up doing 10 to 15 deals a year. There are a lot of companies that we have to pass on, but turn out to be pretty good companies, and would have generate substantial return for the investors. But again, unfortunately, that's just the nature of my business. And if you keep on thinking about that, that unicorn that we miss, and then I will lose so much sleep, and I probably won't be able to emotionally and psychologically carry on my life. But once you've been doing this for long enough, then you learn to let it go. What is past is past, and just move on, trying to find better deals, and gather more information on this deal, and hopefully your next deal will be even better. That's just the nature of our business.
Hey, JP, there's one question here. I'll kind of finish up with this one, and then I'll turn you back over to Dean Rajan, because we've about hit the time here. But the last question that's listed here is, how can VCs overcome the fear of missing out on unicorns?
Right. Again, as I just said, we have missed many unicorns. But on the other hand, as a pretty good VC, with my career or experience at the Qiming, we actually had about 20%. We have invested in the 20% of the so-called Chinese unicorns in the last 10 years. You have to think about it, analyze and review why you have missed certain deals as you go along, and it will be very educational to my team. But by the end of the day, if you can get a relatively high share of the overall unicorn list, I think it's okay. It's not too bad. And again, what past is past, and you just have to move on and try your best. Find that extra piece of information. Meet one extra entrepreneur in a company, and hopefully your next deal will be even better.
So JP, we're out of time. I just want to thank you again, and I want to let the audience know, JP is on our Booth Council, which is our advisory council for the school. He's on the Polsky Council for the Polsky Center. He's just been an incredible alum in terms of engaging with the school, engaging with us in Asia, philanthropically to support the building in Hong Kong, and a lot of other programs we do. So I just wanted to close by thanking you for being such a great friend and supporter of the school through the years, and for being so engaged with us all the way through. Thank you.
Thank you. It's an honor and a privilege to be here and speaking with you tonight. Thank you.
Thanks so much, JP. Thank you, everybody. Bye.
Bye-bye.